Net worth is often thought of as how much cash you have, but that's only one component of it. The other components are the assets you own regardless. The cash you have is a good gauge of your current financial situation. It's even a decent choice to put your money in a savings account, as the growth keeps up with inflation, but the major drawback is that it's extremely slow and won't get you rich. So you must find assets that will give you more than cash in the long run, and in this video we'll show you the best assets that are better than cash in 2024 according to Warren Buffett, so you can retire early. Number 1. Real estate. Real estate has always been looked at as a prized asset, and it's for good reason. They usually have very little volatility when compared to stocks, and their value constantly rises over time. I'm sure many of you know the struggle with insane house prices. However, the constant increase in value means that you can always expect consistent returns. For example, a statistic from Zillow said that the largest real estate market in America has currently doubled in the last 5 years. That's quite the return. So despite the crazy increases in home prices, it may be a good time to consider jumping on it as an investment. You can get rental income by renting out your house to tenants. Imagine getting a monthly paycheck from your real estate investment. But that's not all. The value of your property can go up a lot over time. This means that the house you buy today could be worth a lot more in the future. It's like watching your investment grow right before your eyes. Let me show you some numbers to make it even more exciting. Let's say you invest in a property that makes $3,000 in monthly rental income. That's $36,000 a year. And if the value of your property goes up by, let's say, 8% every year, that's another boost to your investment. Imagine you keep this property for many years. The rental income keeps coming in and the property value goes up. Not only are you making money from the rental income, but you are also building equity in the property. When the time comes, you can choose to sell the property and maybe make a huge profit. I know what you might be thinking. Real estate investing sounds great, but how can I get started? There are many ways to get into the real estate game. You can start small by buying a single-family home or a condo as your first investment property. If you have more resources, you can also look at commercial properties or real estate investment trusts. REITs, which let you invest in a diverse portfolio of properties. The key is to do your homework, analyze market trends, and get help from real estate professionals. It's not about buying any property blindly. It's about making smart decisions that align with your financial goals. Number 2. Livestock. Believe it or not, pigs, cows, chickens, sheep, and goats are all considered assets. To be more clear, animals that are raised for future use are considered capital assets, which makes them no different than stocks. Amazingly, the expected return is quite good, and it certainly should make you consider investing in livestock. If you're worried about the risk, then no, you'd be helping the 1.3 billion people continue living in the way they are, as 40% of the livestock output comes from the first world countries and 20% comes from developing countries. The only way that this would slow down is if humans no longer have to eat, which really doesn't seem like anytime soon. Number 3. Land. Something that comes with livestock is land. You'll need land to keep them on, but the land is also an amazing asset to have. If you buy 100 acres of farmland, it will produce for you every year. You can use that money to buy more farmland. You can do it all kinds of things for 100 years. It'll produce things for you, and you still have 100 acres of farmland at the end of the 100 year, according to the United States Department of Agriculture. They say that they are confident in the amount of land that's currently available for growing crops and don't need to make more. That means it's a good time to hop on the bandwagon. Over the last year alone, the cost of land increased by a whopping 7%, and that's not including the products you sell from owning the land. This strong upward trend has been continuing since 2007. So consider this if you're looking to get rich. If you're loving this video so far and want more content like this, make sure to comment below. Number 4. Mutual funds. Stocks are the primary thing people think about when it comes to investing. But there's another safer option. As stated by Value Research, over the last 10 years, there's been an average return of about 13.36% from large cap funds. On top of that great return, investing in individual stocks is much riskier than owning shares in a mutual fund. Depending on how much you're saving into mutual funds, you can be a millionaire in as little as 10 years. Not surprisingly, A big advocate of low-cost index funds is Warren Buffett. It's a great choice because you don't have to do any research, as the index is composed of all the stocks in a specific index. For example, the S&P 500 are the top 500 companies in America. And if Buffett says it's a good choice, then you should definitely consider it. Number 5. Precious stone. Precious asset commodities like gold and silver can make you rich. These assets have a long-standing reputation for stability and protection against inflation. But why should you consider investing in commodities? Well, let's dive into it. Imagine you decide to invest in gold. It has been a store of value for centuries, and its price tends to rise during times of economic uncertainty. Let's say you invest $10,000 in gold when it's priced at $500 per ounce. Over time, the demand for gold increases and its value rises to $2,000 per ounce. You've just witnessed a 33% return on your investment. Now let's talk about silver. Silver is not only known for its industrial uses, but also as a precious metal investment. Commodities tend to hold their value or even appreciate. They can provide a sense of stability in uncertain times and diversify your investment portfolio. However, it's essential to note that investing in commodities comes with its own risks. Prices can be influenced by factors such as geopolitical events, supply and demand dynamics, and global economic conditions. It's important to conduct thorough research and stay informed about market trends before making any investment decisions. If you found this video insightful, don't forget to like, share, and subscribe. Thank you for joining us today. Until next time, stay curious, stay informed, and happy investing.